To help us set up the day as well as cover some of these headlines, we approach the open here rapidly. We welcome in the co-host of Fast Market, Kevin Hincks. Kev, not only all of these things going on outside the market, it's options expiration day. You're at the SIBO. This used to be a day that was a holiday of its own. You know, there are 12 of them a year. But Kev, give us a little bit of a rundown here of what you're looking at.
So you're right. This is a significant options expiration because the March, June, SEP, and DEES are bigger volume trading expirations than some of the others. Now, a lot of that is on the screen now, but the volumes are still big. There's not the same trading pits that there used to be for a day like this, but you can still expect higher volumes, even in a summer trade without a lot of economic data today. This is still going to be a higher volume day as 3 of the 4, there's expirations in futures, in equity options, and in index options, Alex. And so when you think of it like that, there will be a lot of rolling, a lot of extending duration on trades, a lot of closing of trades that are coming off today. So it'll be a bigger volume day. But besides, in terms of movement, it's still not normally what you see is just a bigger volume move, whatever which way we go, right? It usually leans to the upside, but that's not guaranteed at all. But watch for just bigger volumes across the board, Alex.
This alongside, I think, 2 pretty big headlines since we last spoke or last looked at markets. One being, it was largely hinging on, correct me if I'm wrong, a press conference with the press secretary yesterday that kind of put an extended timeline on potential action from the U.S. in terms of getting involved. And I think the temperature regarding that has come down dramatically. I think that was the first piece. Kevin, again, correct me if I'm wrong. And the second, of course, being Waller just in the last 45 minutes or so. Walk us through kind of how you're seeing how these headlines have developed here through the holiday into the trade today.
Yeah, let's take the first one. And that is that it appears, based on the press secretary's release and discussions, that the Trump administration will take a 2-week look at whether to get involved in this. I'm sure it could happen anytime, but they've kind of extended the look at this out to 2 weeks. I think that's why crude oil has a relatively muted trade today, Alex. But then, remember, the markets were down early this morning and overnight, but then Fed Governor Christopher Waller came out with some comments that he doesn't think the tariffs are going to affect inflation. He thinks the Fed can move as early as July in terms of lowering interest rates. So those 2 things combined, one is calming the crude oil markets, and the other one has the market going from negative to positive on the day, Alex. So in a thin, summer trade, we're looking for something to give us some direction. Christopher Waller may have just done that.
Yeah, I think let's start again with the first headline. The fact that there might be an off-ramp, at least towards escalation, a de-escalation ramp, I think, is a way to put it. The market liked that. And so that's when you really started to see the futures move off their lows. Now, the timing of when it happened was sort of awkward because it happened during the pause between when the markets were closed in the futures trade till they reopened last night. So you saw them close near their lows, actually, in the holiday trade, and then reopen last night in sort of a gap up open sort of a fashion, and then sort of built on that throughout the evening's trade. Waller really threw a little bit of nitrous on this with his comments, but I got to be honest, Kevin, I want your thoughts on it. I think this makes sense, and the reason I say that is if you're going to be data dependent, what has the data been? Inflation has become, it really hasn't been an issue, to be fair, for 2 years. But if we're going to be honest about it, it's dissipating and it's still disinflationary, despite all the rhetoric around it not being that. And the second being the job market is slowing. I mean, it's still growing, and that's a good thing. That's your soft landing scenario. But to me, it's become increasingly more straightforward what the decision for the Fed is, but they have this sort of asterisk they keep putting on things and wanting to see more. But I want to get your thoughts on that, because I think Waller makes some good points.
I think here's where I think you're spot on. The fight on inflation is going very well. Inflation is overall coming down. Everyone expects, if you've been watching the markets for years, that the final 1% to 0.5% of inflation is going to be a little more difficult than the first several points on inflation. But the fact that inflation's doing well would lead you to the narrative of lowering interest rates, right? Maintenance cuts, making the Fed funds rate less restrictive. Now, what has stopped that, or what has paused it, is the fear of tariffs. So if you start dismantling that narrative and saying the tariffs aren't going to cause inflation, then it gives you a wide open field to start cutting rates. And Waller saying that it could be as early as July, let's face it, there were no comments from Jerome Powell on Wednesday hinting to a July cut. And he's been very good at guiding towards his cuts and really giving the market enough information where they're not surprised by anything. He didn't do that on Wednesday. So Christopher Waller coming out and saying this starts to change the narrative a bit to where we could see the rhetoric starting to shift towards lowering interest rates. Remember, if that tariff inflation narrative starts to dissipate, then there's a clear path to cut rates, Alex.
No doubt, and beyond that too is I don't think they're even trying to set up the July cut, but if you say it could happen in July, it makes September a lot easier to get to, and we've talked about that a lot. The Fed tries to operate like a cruise ship, so as much as they tell us they don't have a path for monetary policy, you just look at them historically, unless there's a surprise that they have to react to, they try to telegraph what they're thinking they're going to do and lay out a path so that the market kind of gets there on its own well before it happens. Now, the market has been front-running these cuts for 3 years now, and they really haven't been coming. So that's the other thing to think about. Kev, I want to talk about Tesla because Mr. Ives at Wedbush talked about this being a golden era of autonomous and seems pretty excited about this Robotaxi event.
Yes. So on the calendar, the Robotaxi event is scheduled to break out on Sunday, the 22nd. Now, we'll see. You got to watch for headlines on any extension or delay of that, because there has been some whispers that some of the local politicians and government want them to delay that till September. We'll watch for that and see if it happens. But there is one event on the horizon for Tesla. Be prepared to be underwhelmed. It's not going to be a massive rollout. It'll probably be very careful with only invited guests taking robotaxis. Now, that said, coming up on the calendar, early July, you'll have Q2 deliveries in Tesla. Might not be a great number. July 23rd, you've got earnings in Tesla. Those are really side topics now compared to the robotaxi layout that is supposed to fundamentally change the direction of this company. So, the massive premium built into Tesla, it's for the robotaxi. So it's got a lot riding on at least something happening on Sunday or in the near future, Alex.
Kev, the stock right now up about, let's call it $6 in the pre-market. And in some ways, I almost think that's unchanged for Tesla just because of how much this stock moves around. So relatively quiet start, but a nice indication for a almost 2% up day to start for Tesla. Kevin, we appreciate it as always. We'll see you on Fast Market here in a couple hours.